Tom Halverson, thank you so much for being with us again to talk about COVID and its impact on the economy. We really appreciate it. Today is April 22nd, and what we wanted to do today was look at pricing information for different classes of assets, including commodities, and get you to react to that and form some conclusions about how the pandemic is starting to show up in the rural economy of the U.S. Going to turn your attention as kind of a baseline to equities. This chart shows the S&P 500 indexed from January 1, and this is obviously a view of kind of the large corporate part of the economy. What do you see or what do you think about when you look at this, and what does it mean for the U.S. economy overall in your view?
You know, the financial economy is not the real economy, right? This is the aggregated price of the securities of publicly traded companies. So it tells you some things, but it doesn't tell you that much about what's really going on in the economy. What it does tell you, however, is that that stack of value, the aggregated market cap of all those listed companies, went down 30% in effectively less than a month. It's rebounded about half of that in that period. But that is a very large amount of financial losses for the owners of all that stock to absorb in a very short space of time. And one of the things that you have to understand when there are big adjustments one thing, but a big adjustment that happens in a very short space of time in certain respects is like an even bigger adjustment that happens over a longer period of time, because it really makes a lot of things crunch and smash in a very short space of time, and therefore has more knock-on consequences. And as we'll discuss here in a moment, I think the magnitude of this is going to be shown to be analogous to the kinds of immense moves in other prices that we're seeing across the economy that ultimately shows up in real economy impacts.
We're going to go to the commodity world now, and we're not trying to make you a commodity analyst, but we want to get you to react to these because all of the charts we're going to look at next really do touch the rural part of the U.S. economy where CoBank's customer base exists. This chart shows energy prices both for oil and then ethanol, again indexed to the beginning of the year. What do you see here in terms of the implications for rural America?
Big implications from this chart. So we have two things happening at the same time. A giant push of supply by big producers, Saudi Arabia and Russia. That has a big impact on driving down oil prices because they're trying to push marginal producers in the United States and other places out of business so they can take more market share. Then you pile on top of that COVID-19 and the vast majority of the United States economy being put in lockdown for an extended period of time. Most people's cars have been sitting in their garage not being refilled for 5 or 6 weeks, and that has big implications, right? If you think about rural America and you think about agricultural America, a very material portion of the corn grown and produced in the United States gets pushed through the ethanol complex, turned into fuel that then goes into the economy. That is a very large knock-on effect across the rural economy, particularly in those parts of the country that are the demonstrable majority of corn production and the inputs into the ethanol complex.
So another piece of what you've just talked about is oil production itself, which over the last 10 plus years has migrated to a great degree into rural areas.
We went from being a net oil importer for the vast majority of my life to being a net oil exporter. We produce more than we consume. And we've done that through technological change and innovation and fracking and so forth. And it has a big impact on the rural economy. There are lots of jobs, in many cases high-paying jobs, that have been attracted to the places where that industry has grown so much over the last 10 years.
Let's move from energy to row crops, which are shown on this slide here, and just talk about what you see here when you see the pricing trends, again, indexed at the beginning of the year for wheat, for soybeans, and for corn.
Well, each one is different. The markets for these products are different. Everybody, including me, has been buying a lot more bread because we're all working at home, so we have a freezer full of bread, and wheat prices have done reasonably well, probably better than any of the other things that we're going to look at here, even though they're down by a little bit. Soybeans are off quite a bit. That was a problematic situation before COVID-19 because of the 2 years of trade disputes with China, and we were debating whether the Chinese were going to be able to buy everything they'd committed to buy in the first phase trade agreement and so forth. So there's a lot of uncertainty there. The fact that the corn price is down as much as it is substantially caused by the fact that there isn't as much demand for the corn to go into the refineries, to go into the ethanol production complex to be turned into fuel.
The next chart shows kind of the world of animal agriculture, cattle, hogs, and then dairy. And again, downward sloping lines again here. Talk about what comes to mind here.
This reduction in prices for milk and for hogs and for cattle is having immediate, dramatic, negative impact on the entire production complex from coast to coast. And everyone will remember the pre-COVID, but most of our life, when you're on a highway and there's too much traffic and everything's going along fine, and then all of a sudden the sheer weight of traffic, people slow down, pretty soon it's bumper to bumper, and then you all speed up again, and then you slow down again. Why is that happening, and why is this analogous? Well, the supply to the market is kind of tight. You know, there isn't a lot of overproduction. The market is usually pretty balanced. But when you go through a massive shock like the economy is going through right now, which is unprecedented in its attributes, it's like all those cars just kind of piling up. You're like, I don't see any reason for this. There's no accident. There's nothing going on. But there's something that's happening that demonstrates that we're all connected here and the market is not clearing and we're all bunched up. That's what's happening here, right? We've lost the entire food services sector. Every restaurant is closed. And therefore, what's happened is, the supply process is just piling up because we have more dairy than there is demand, or we have more, fill in the blank than there is demand. And then you throw in the wild card of COVID-19 impact other number 99, which is you have a you have a known number of meat processing plants. Well, you have an outbreak of COVID cases in a meat processing plant, and for a variety of people who get to make the decision, they close the processing plant. Now, all of a sudden, that amount of product that needs to be slaughtered and processed and so forth, there isn't enough infrastructure to do it.
Last slide that we want to show you and get you to react to is from the energy side. It shows aggregated electricity demand from January through to the present. When you look at this, what do you see and what does this tell us?
What this graph shows you is a lot more volatility than you would normally see in this industry. And this is a reflection also of the significant shock that's happening to the economy. So when you shut down a whole bunch of the economy, and particularly large industrial, commercial industrial producers, think factories, auto factories, and other big plants that use tons and tons of electricity, those things just get shut down. That's a lot of load for electrons that you've built billion-dollar power plants to be able to supply that load, and that load goes away. The number of megawatt hours of electrons that are demanded in the economy goes down, which is pretty unusual.
So last question is there a way to put this all together that adds up to something more than just this is a very sobering picture for the rural economy? Can you sum it up for us?
In the very short term, as emergency measures, there are going to be needed and there are being put in place a variety of the same sorts of emergency measures on behalf of the federal government designed to help and support the agricultural economy in the same way that they're trying to support small businesses and other sectors, airlines or what have you. And those extraordinary measures are just as necessary in rural America as they are in urban America, and in some respects potentially more so. because the gap between rural America and urban America on so many metrics before all of this occurred was already wide and widening. And part of our risk here is that if rural America doesn't get the attention that it needs and deserves, those gaps which already existed could be accelerated and exacerbated as we exit this crisis.